Hi, everyone. Hope you're doing well. I have a guest with me who's no stranger to the show. He's been on many times, Matty Greenspan, and he's not with eToro at the moment, but at his own company, Quantum Economics. Matty, thank you for joining us.
Thanks a lot for having me, Tony. It's great to be back on.
Matty, I'm very curious about your new company that you started. Last we spoke, you were at eToro, but can you tell us about Quantum Economics? What are the services you provide?
Yeah, certainly. So it's quantumeconomics.io. We have three main areas of expertise, which is analysis, advisory, and money management. So analysis, of course, I don't know if you're getting my daily updates that I'm sending. I was sending those out in eToro as well, and people really liked them. So that was really the first thing that I wanted to get up and running. So I left eToro on it was a Friday afternoon in November, and then Monday morning I already had the website up. It was just basically a landing page for people to sign up for the newsletter. So now that's happening, and it's basically for free for anybody who wants to get my thoughts on the markets on a daily basis. In addition, we do analysis on demand. So I've expanded. Now we have a team of 3 analysts. And basically we can do anything from research papers, white papers, infographics, press releases, you name it, anything that has to do with financial markets, content. And we're basically targeting brokers and exchanges who want to, keep in touch with their clients or stuff like that. The type of thing I do with my newsletter. And the writers that I've lined up, the analysts are simply each and every one of them is exceptional. I must say I'm quite honored to be working with them. You know how when a writer or when you start reading something and it immediately just grabs you and you have to read it until the end. So each one of my analysts has that, and I'm very happy to see what we're going to be able to produce with that.
Very cool. That's exciting. And as far as the markets that you provide information on, does it include crypto?
Of course. Yeah, definitely. So macro first, but crypto, we believe that crypto is very much part of the macro picture. It's inseparable at this point.
And very interesting. And so folks can go to your site and leverage the information, follow some of your trades and so forth, but also get premium services, I'm assuming?
Yeah, that's correct. So we have several clients in the advisory side as well. Lunar Crush is one of the first ones that we've done publicly, where I'm advising them. They're basically a website that does social media metrics. So they have amazing graphs for showing what the community is thinking about specific coins. And they have their own ranking systems and stuff like that. So as soon as I went onto their website for the first time, I was just blown away by the data that they have and the way that they present it. And that was just immediately something that a team that I wanted to partner with. And now I'm going to help them as much as I can to see them grow within this unique market.
Awesome.
Yeah.
So on that note, what are your thoughts about the markets right now, crypto, stock, and so forth? I know there's fear across the board because of the pandemic, but what's your perspective?
Yeah, so it seems like some of the initial fear might be edging off a little bit by now. I mean, to preface this entire discussion, we do need to understand that the world is changing in ways that we haven't yet realized. Both of us are sitting in quarantine at home as we speak, and I believe that a lot of the viewers are as well around, and that's globally. And we don't know at what point that will be over. We hope that Donald Trump has given a very aggressive view by Easter Sunday. And I hope that we can pull it off, but I think that obviously that'll depend on the medical professionals, and it will be a very difficult target. we have to realize that it might be a few months before things return back to normal, if ever. I don't know when or if, we'll be able to sit in restaurants again as we did before. I think that it could be many years from now before people feel really comfortable going out to eat, going out to the theater, going to a concert or sporting event or something like that. So many things are changing with the world, and of course the markets are changing. They're doing their best to try and price that in, of course.
Yeah, agreed. It's uncharted waters. So on that note, we see that the Fed has been really scrambling to print as much money, get out as many stimulus bills out there. Obviously, the situation is what it is, and they're trying to fix it. However, it's on top of a broken system, I personally believe, where they've been printing and printing and doing many different things to manipulate the market and the economy. What is your perspective on what's going on with all the printing of money?
Yeah, so the Fed has basically declared QE infinity or unlimited QE, and this is something that's been hypothesized for many years already. There was a total of 3 rounds of quantitative easing in the United States. And even as far back as 5 years ago, somebody told me, hey, somebody, which is a random guy on Twitter, he said, yes, they're going to do QE4 and it's going to be QE infinity or unlimited amount of QE. And I was blown away when they actually announced that. I said, okay, what are the ramifications here? Basically, they are willing to buy the entire market, right? It's, you try and wrap your head around that. There is no more free market as we know it. There is no more capitalism of, companies take risks on businesses. Sometimes those risks pan out, sometimes they don't. If the risk is large enough, it seems that now the Fed is willing to come in and step in and buy it for you. So, and this is something that's really helpful for the market at this time, especially, we've seen some assets, mortgage-backed securities, for example, there were no buyers in the market over the last week.
Sure.
Like, just nobody. There was everybody was selling and there was nobody on the buy side. And the Fed was the only one, going, okay, we'll buy a little bit. And now that they're coming in just saying, okay, we'll buy it all. So that in conjunction with the fiscal stimulus package, which is $2 trillion from the government, which is supposedly to put money in the hands of the people. I'm still going through it this morning, so I'll be able to write about it in today's update, and just kind of let everybody know what's in this $2 trillion package.
Sure.
There's going to be, I'm assuming, a lot of helicopter money, which is basically free money for citizens. People, dropping money out of helicopters, as we know already. It's just weird that everybody is now familiar with the term helicopter money. They don't have to explain it anymore.
Right.
And universal basic income, I would assume some level of it until this crisis is over. And I think that that's also those type of policies are going around the world. And I think that those are new policy tools. And this isn't the last time they're going to be used. So even if they're just being used for the purpose of this intervention and this crisis management, as we've seen before, for example, with quantitative easing, right? The first time it was used was literally to save the world, right? Literally, the world was falling apart. And they came in as a last resort to use this new tool that nobody had really heard of before, and they fixed the world somehow, right? They put it back in place. But then they did round 2 and round 3, and then Europe started, and then everybody else started. So we know that once a tool becomes available, it's very difficult for them not to use the tool.
Yeah.
And then September 2019, just now, there was a bit of a problem in the repo market, and the Fed goes, oh, what am I going to do? Oh, let me just pump money in, right? I can do that now, right? And it all of a sudden becomes very normal for them, even if it's not completely necessary. They're just going to use the tool because they have it available, because the policymakers sitting there, right, chairman of the Fed going, okay, I can either let the repo markets explode, right, and fix themselves, become a free market again, or I can inject a few $1 billion and fix the problem. And so what are the ramifications for the person in charge, right? He's either seen as somebody who fixed the problem or somebody who stood idly by, right? So he really has no choice in a game theory way of thinking. He really has no choice but to use that policy tool that he now has access to. So universal basic income is going to increase in prevalence over time. Now that Pandora's box is opened, it's going to be used, I think, a lot more widely now. My question is, did it work, right? Did the Fed's action of QE infinity, along with the fiscal stimulus bill from the United States, is that going to create a bottom of the market? And I think that it may well do so. However, of course, that comes at a heavy cost. We can only speculate as to what that cost might be, but I have a feeling that it might be at the cost of the currency itself. We'll see how that plays out.
Yeah, and part of that stimulus plan, we saw some notes in the bills, respectively. One was stripped out, then they introduced a new one, talking about a digital dollar as a gateway or a way to provide the stimulus money to the Americans. What are your thoughts on that?
Yeah, so that was a bit of a weird flex, wasn't it?
Yeah.
First of all, I don't know that it's Congress's responsibility to implement the digital dollar. And we're talking about central bank digital currency, or CBDC. So I believe that the responsibility to implement such a thing would go to the central bank, right? Mm-hmm. The Fed would be the ones who had to decide whether or not and how to implement such a tool. I think that really what that was showing more than anything, and I know that a lot of people in the crypto world were very excited about it, but I think that it's just actually a hallmark of the dysfunction of the U.S. government. A lot of the time what happens is when laws are passed in the United States, because you have basically the Democrats and the Republicans, and they're both fighting on opposite ends of the spectrum. There are very few politicians in the middle these days, but rather America is being ripped apart by the extremes. So whenever there is a law that's going to be passed, right, every single senator and congressman is going to be placing in their one platform agenda that they have, or some lobbyist has been paying them lots and lots of money to get a law passed, or some of their constituents want this law passed. So there's a lot of bundling inside of these laws. So as soon as there's wind of, oh my gosh, we have bipartisan support, and that F word, bipartisan, gets these lawmakers all hot and bothered. And they go, okay, bipartisan, I'm going to put my thing in, right? I'm going to put my little piece of text in there. So sometimes you get these laws that are pages long, thousands of pages long. Nobody can ever read them because every single lawmaker want to put their little thing in there.
Yeah.
And some of the original proposals that for this bill were just completely ridiculous. I mean, stuff like emissions standards for airlines.
Yeah.
Right. And things like tax credits for clean energy, and like a lot of things they just got stripped out at the end, because this bill was really about crisis management. And I don't think that there were very many extras that got squeezed in the end of it. So it could have been enough that one congressman or congresswoman wanted that digital dollar bill in there, and they just snuck it in. And of course, it was taken out before it got passed, because there's no reason even for Congress to pass such an ordinance, let alone for it to go through.
But do you think the U.S. is trying to beat China because they're trying to develop their digital yuan? Do you think the U.S. wants to be the leader there, given the world reserve currency status and that type of thing?
Well, who in the United States? Former CFTC chairman John Carlo,
Yeah.
also known as Crypto Dad. I mean, he's made it his life's work to make sure that that happens. But he's a lobbyist now. He's not actually a politician anymore. He's not the chairman of anything except for his little lobby group. And he's got a website about the digital dollar, how it can be implemented, and how wonderful it'll be, and all that. But I don't think that it's a priority for the people who are making those decisions. And like I said, I think it's really the Fed, the Federal Reserve Bank, that needs to, at the end of the day, take a lead on it and say, okay, we want to do this. And I don't think there is really any motivation from the Fed at this point. Nor is, with coronavirus happening, nor is there any real, time or urgency, shall we put it. I think that, and this was one of my great predictions of the 2020s, was that China is going to implement something. Europe, probably along with several others, Bank of England, possibly in collaboration with the Bank of Japan, are going to put something together as well. And I think those will basically kick the dollar out of the way as the global reserve currency.
Very, very interesting. And my last question here, we saw Bitcoin, for the most part, move with the stock market. And I think that was because there was a lot of fear across the board, people liquidating their positions to make up for losses, and I think the stock market. But I'm curious what your perspective is as far as Bitcoin and the correlation with the stock market.
Glad to show you a few charts on this one as well. I've got some stuff prepared here. So this is coinmetrics.io. This is showing the Pearson 90-day correlation between Bitcoin and the stock market. And check out over here, we are at a record high at the moment. Correlation is generally measured from 0 to 1, or -1 to +1, where 0 is absolutely no correlation. -1 would be a perfect negative correlation, and +1 would be perfect positive correlation. And for a correlation to be somewhat strong, you'd want to see somewhere around 0.6 or 0.8 would be a real strong correlation. And right now, for the first time in history, there actually is a correlation. Last time it was this high was, November 2018, and that was also driven by macroeconomics. The Fed was about to raise interest rates, and the markets were freaking out, and the stocks were falling. Bitcoin was falling at that time.
Interesting.
So now with this crisis, we see, not 0.3, which is little correlation. We see 0.6, which is already, we're talking about a real, I wouldn't say very strong, but a strong correlation between the stock market and Bitcoin. And we can see that also on the chart very clearly here. This is February 24th, which is where the virus jumped outside of China into Iran and Italy, and Iran and Italy started getting on the board some real numbers. The blue is the stock market, of course, 26% decline. Orange is Bitcoin, and we can just see some of these days, right? Downward day here. This one over here I thought was most interesting because the stocks were reaching their limits, right? The stock markets have these limit downs, which they just can't exceed. Right. In a lot of the cases, they were reaching those limits quite quickly. This major sell-off in Bitcoin was also repeated throughout the world of commodities as well. Just put like silver up here, for example. I believe that silver had quite a sizable sell-off, and the copper, I believe.
So, as far as
destroyed that day,
your theory regarding this, Is it folks liquidating just their positions because of fear across the board? Or do you think because more maybe institutional investors are in Bitcoin and the crypto market now, if they sell off across the board, that type of thing? Do you think there's some theory there as far as what may be happening?
Yeah, so it's pretty clear what's happening here is in a crisis, all correlations go to zero, go to one. Here you can see platinum and palladium exactly selling off at the same time as Bitcoin did that day. So it was a pretty dark day for a lot of commodities.
Sure.
And gold as well. Basically, what happens is that fund managers who are trading on margin, right? They have leveraged trades, and they see big red flashes across their screen going, you need to put up margin, you need to put up margin. And as the stocks are selling off, they don't want to lose some of their core positions. And if they don't deposit pony up some cash immediately, they will start losing those positions. So they go to where they have cash, and where they have cash is generally going to be from some of their investments that they've made a year or two ago and are in green at the moment. So that would be gold and silver, platinum, palladium, copper, and Bitcoin. Yeah. So they just sell it off as soon as they can. So that big plunge, I would say, the big March meltdown in Bitcoin is basically the weak hands leaving the market, which are the institutional players, most of which who came and actually just joined this market in the beginning of 2019, right? We had a huge rally in the first half of 2019, largely driven by institutional investors. And I believe that they've basically gone at this point, which is a good thing, right? Because then we get to start up from the beginning, and either they'll join in with us and become hardcore hodlers for the next round, or not, which is fine with me too.
Yeah, and it's obviously not a normal, let's say, recession because you have this pandemic on top of it. So I think it's not like 2008. This is 2008 plus a pandemic, and it's kind of uncharted waters. So we'll have to see how things go. Maddie, great information. I learned a lot today. Thank you so much for joining us, and of course, we'll love to have you back on as things progress in the markets and the economy.
You got it, Tony. Thanks for having me.